a very, very technically challenged live stream on this evening, being Sunday evening, the 18th of the year of our Lord, 2022. All right. My camera refuses to work. I don't know why, but everything else seems to be working. I tried as hard as I could. So you won't be able to see my smiling face, but most of you will probably clap in joy that you don't have to look at my face. So we're going to go over today the economic data coming out this week. Obviously, the Fed is going to be the big headliner this week. And if somebody could please give me an audio check, I'd appreciate that. Oh, Franklin already did. Thank you very much. Seymour Rivers on ball too. Yeah, I can't blame you for the video today, Seymour. So it's completely on me. Yoga Mac. Hey, yeah, it's really me. It's really me. Pete, welcome. Okay. Maybe it'll pop on sometime during. Let me do this Control V thing they're telling me to do here. Control V. That didn't do anything. All right. Let's go over the futures action. Tom, hello. Good to see you. Hope everybody had an awesome weekend. So we're opening up here with a bit of weakness on the S&P 500. You're looking at a 15-minute chart of the E-minis, and we are down slightly. Let's go to a 30-minute chart. That's better. We had a good rally into the close on Friday, and even the VIX sold off on Friday. So down fractionally. Let's move on to we have the Russell 2000. Let's go with it in front of us. The Russell down just shy of a 1/10 of a percentage point. Again, another instance where you had a nice rally into the close on Friday. Where are my NASDAQs? Everything is screwed up today. There we go. NASDAQ is down. No great shock here. The NASDAQ continues to underperform everything. NASDAQ down nearly a 1/3 of a percentage point. Do we put in a higher low, or do we break out to new higher highs? Those are the only questions you got to ask yourself, because this is going to be one volatile week. We held some support here. Let's see if we hold it this evening. Okay. So equity markets are down fractionally with the NASDAQ, the clear laggard. Let's check in with the currency market, beginning with the US dollar. This is all about currencies nowadays, folks, all about currencies. And the dollar is up on the session, off the highs of the session. We drifted lower in the after hours on Friday. We're trying to rally it now. A bit of a fade. Let's check in with the euro. I personally think you're going to get a breakout in the euro and a breakdown in the dollar. I've been saying that for the past couple of weeks, despite the strength in the US dollar. It's just the way I see things shaping up. The downtrend on the euro is extremely long in the tooth. A lot of bad news, and rightly so. A lot of bad news is baked into the euro's downward move. I mean, you get one bit of good news coming out of the Eurozone, you're going to see it rip up higher. And at current, the euro is up higher along with the US dollar. And this is all very strange in that on Friday, you had the US dollar trading up, you had the Japanese yen trading up, you had the euro trading up. You never see that, ever. The two top largest components of the Dixie basket are the euro and the yen, by far. I don't remember seeing a massive rally in the Swiss franc or the Canadian dollar, the Aussie dollar, the British pound. The yen drifting lower at the open here. Now, we have a good feel. Let's go back to the dollar for a second. We have a good feel for where currencies are at. There's a change afoot here. There's a change afoot. Let's check in with gold. I don't expect much here because it was a disastrous week last week. And the dollar's up. Oh, look at that. Gold is up. We were lower and we reversed. Let's see if we turn positive here. We may just do it right now. Oh, we are positive. I mean, new session higher highs. Sorry about that. Yeah, we're there. You're seeing some buying of gold fractionally. Moving on to silver. I'm going to go over an article in a moment about how the price of silver has just been beaten down so much. You're seeing the London Exchange see massive outflows of silver out of their vaults, possibly looking for a better price over in Asia, where Moscow is setting up a precious metals exchange. Silver up a percentage point already. It had a very strong week last week. Here's the weekly chart. Last week, I think this is this week, already showing open. Yeah. So good week. We are breaking out on a weekly time frame. Silver looking pretty good as we go into the new trading week. And if you think about it, you have the Federal Reserve meeting coming up this week, and you're seeing bids under silver, not so much gold, but under silver because it's so undervalued right now. Sticking with the commodity trade, the only thing right now that's really going to save equities, with the exception of a Federal Reserve that comes out a bit more dovish than might be expected, which I'm not betting on, is a move lower in crude prices. But as you can see on the weekly chart here, we are in a downtrend, no doubt about it, on a weekly time frame. But they're trying to break it out. We're up on the session. This is a weekly chart. Let's go to a 30-minute chart. Yeah, they're trying to break it out. Let's see whether or not we break to new lower lows here. Now, if we get a pullback in oil prices, that sets the stage for a potential rally in equities, because the market will interpret at the Federal Reserve, they don't have to be as aggressive. Same thing, rinse, wash, repeat. Same thing over and over and over again. But it looks as though we are breaking out on crude prices. I screwed that up. I'm not going to bore you with me redoing that. Let's take a look at nat gas prices, of which we are long. And frankly, natural gas was one of our losing trades last week, and it continues to lose today. We've gapped down here We were down well over 1.33% at one point in time, seeing a bounce back. We're down one spot, 3% on the session. Obviously, this is on thin volume, but it can't be ignored. So we already have new weekly lower lows on nat gas prices. Let's take a look at where we may have some support. This is a daily chart, which I really don't want to use. Let's go to a weekly chart for a better view of support levels. Oh, we're right there. We hit it this evening. There you go. So what I want to know is do we break to new lower lows? If we don't, and we consolidate at these levels, then we'll be looking to add to our natural gas position sometime this week. I'm probably not going to do much before the Fed meeting. Let's take a look at agriculture. Corn was stalled out last week. Reversal bar. Rough rice. Oh, looking really, really good here. Really, really good. This is I don't think this is this week. No, this is last week. Let's take a look at how we're trading at current. Rough rice looking strong. We're down. We're flat on the session. Oats. Oats are up a half percentage point. How are they looking on a weekly time frame? They're looking good. They're building a base. Oats building a base. Looks like we're going to start building the right side of a big cup. Soybeans. Soybeans rallied last week. They found resistance at $1,500, and they backed off the highs of the week. But we are putting in higher lows. Daily view. 30-minute view. And they're going to try to break this out. They've already broken it out. You got to break out on soybean prices intraday. We broke out here on Friday, pull back, retest, retest, retest. We're doing the same right now. We're down in the session. I think that ultimately this gets resolved to the upside on soybeans. Gasoline. Gasoline has come in quite a bit these past couple of months, past few months, not a couple of months. The problem is this, and it's what I always say about when you're looking at something that's been in a bear market or a downtrend or a corrective phase like gasoline has been in, step number one, that the instrument, the commodity, the stock, whatever you're looking to trade must do before you step into the breach and begin buying, it's got to stop going down. So has it met that threshold? You darn tootin'. We stopped going down really in earnest back here. We bottomed out the week of August the 29th, retested, took out the prior week's lows, but rallied back. And we have stopped putting in new weekly lower lows. Now, it looks as though we're trading up on the session. We are. Let's see how we're looking on a 4-hour view. We're beginning to put in higher lows. So unfortunately, it looks as though we may get a creeping back up of gasoline prices in the coming days. And I am not happy to say that at all. Now, believe it or not, the Chinese have a pork strategic reserve, and they have begun accessing that reserve. So you would think that hog futures would be moving up higher. and they're not. Well, the weekly chart now they're starting to put back up. 2 back-to-back up weeks. So interesting. Again, another instance where we've stopped going down and now we're beginning to work our way back up on hogs. So net agriculture, commodities overall, the energy sector has been in the corrective phase. Nat gas prices are pulling back. Looks like oil prices are stabilizing a bit. Gasoline prices are stabilizing a bit. You have a bid under protein. You have a mixed picture with agriculture. I don't think we went over wheat, which allow wheat to be the tiebreaker. We've had a nice rally. We stopped at resistance last week and we backed off a bit. Let's go to the 30-minute chart. So these prices are inching back up on agriculture, and I'm not happy to say it. Okay, let's get to it. All right, so we are heading into week number. This show is brought to you by TrendSpider Automated Technical Analysis. Link below. 35% discount code. Automated Technical Analysis, and of course seasonality. What we're going to be doing moving forward is part of the Sunday Night Futures action is taking a look at seasonality on the S&P 500 on at the beginning of a month. We'll do we could do it each week. Actually, we could do a monthly view and of course a weekly view. Now, over the past 10 years, the month of September up only 40% of the times. It looks like we're setting the stage for a continuation run of disappointing September performance on the S&P 500, moving towards a weekly view of historical performance going back to week 39, which we're in right now, effective Sunday through next week. And we are up only 33% of the time. So seasonality from a monthly perspective and from a weekly perspective, not looking good for bulls, looking good for shorts. Next week, it doesn't get much better, but at week 41, things begin to really trend up higher. So if you're overweight right now to the long side, you're worried about a margin call, lighten up. Sell you till you could sleep. Brighter days are ahead, seasonality-wise anyway. Let's take a quick look at how the Qs trade. These are technology weighted. Oh, alert fired off. Oh, that's a news item from Thinkorswim. Qs past 10 years. Good news for technology traders out there. The Qs have performed better than by a wide margin, better than the S&P 500 during week 39 of the year, and on a monthly time frame, they do worse on the month. So not a lot of hope here for technology, but a lot of damage has been done already. We'll see whether or not the Federal Reserve is able to create a rally in the markets. The only way they're going to be able to do that is it's widely expected that they're going to raise interest rates. There's no argument about that. You can debate 3/4 of a basis point, half basis point. If they're raised by a half basis point, stocks are going up higher. Stocks are going up. If they go 3/4 of a basis point to a point higher, it's going to be all about the statement, all about the press conference. Taking a look at valuations. Folks, we saw the equity market. Let's go to the S&Ps. On the week last week, put in an outside reversal bar, closed down over 5.5%, and we're still overvalued. So please, if you're thinking that now's the time to buy simply because we had a rough week, no, there's clearly no indication whatsoever that we have seen a floor in this market and that we are about to reverse. No bottoming action whatsoever. Last week, an outside reversal bar. The probability of lower weekly lows is very high. So let's respect the data. Let's respect the seasonality. Let's respect the environment that we're in. And I'm going to take you down a kind of a very sad state of affairs of where we are truly at in this country and in the West in particular. Not even just this country in a moment, but the West in general, and how the world is changing in front of our faces. And we could profit from it. You just need to be willing to say, you know what? The days of Amazon, Netflix ruling the roost in terms of being the investment du jour, they're over. You got to look elsewhere. Moving on to, well, sticking with this for a moment, how overvalued do we remain? We remain 31% or a 1 standard deviation move beyond historical trend, which is down here. So there's a lot of an air pocket between historical trend and where we're trading at current. Taking a look at the Schiller PE ratio, we have new weekly lower lows. We're less expensive than we were last week, yet we remain overvalued according to the Buffett indicator. Remember, the Buffett indicator uses GDP to help value equities, whereas the Schiller PE ratio is based on earnings. And yes, we did pull back last week, but we're still on a relative basis quite expensive. The mean is 16.98 at current. We're flashing 28.99. Now, taking a look at economic data coming out this week, not a lot. Let's face it. We had the Fed meeting coming out this week, and it's going to mean everything. The only thing I'll say to keep an eye on is this: building permits on Tuesday. Building permits are an interesting data point to watch. It's because just because builders take out permits doesn't obligate them to break ground on new properties. So this is a forward-looking indicator. And of course, if we see building permits drop down along with housing starts, that's clearly a sign that the housing market is deteriorating further. We're also going to be looking at existing home sales, a clue to what's going on in the housing market. And of course, Wednesday, Jay Powell, with all of his spry and optimism, will be out on Wednesday delivering us his words of wisdom about how the central banksters are going into a Goldilocks economy yet again, and how nothing was their fault. Thursday, initial jobless claims. If you believe that report that came out last week, I have a bridge to sell you in Brooklyn. Leading economic indicators, not a big one. Friday, we have PMI data coming out, folks. Friday's going to be important because we are already in contraction for the past couple of months on services. Any read below 50 is a sign of contraction, and any read above 50 is a sign of expansion. So services are already in contraction, even though the government says that, oh, well, no, we redefined recession, so don't worry about it. You're not in recession now. Okay, thanks for that. So let's keep an eye on manufacturing PMI, and we'll see how we close out this week. Remember, though, if it comes out bad news, it's usually good news for equities. Not that last week's economic data helped at all. I got to be honest with you. Last week was rather disappointing. Empire State Manufacturing Index declined. Sentiment survey missed. CPI hotter than expected by far. Year over year, around expectations. So a lot of pressure on Powell this week to to deliver a death knell. But if you see the equity markets moving lower into the midterms, it's going to be all about Trump is already pounding the table on people's 401k plans, and they're going to have to shift gears really, really quick. All right. So FedEx came out last week and they just nuked the market. And that's really what drove the markets down lower on Friday. And their expectations are dismal. I was going to do a video about it over the weekend. I didn't get a chance. But the U.S. macro surprise hard data dropping like a rock. Expectations for Fed rate hikes declining, and you're seeing subsequent rate cut expectations rising. So what this chart is telling you is that whoever they're surveying here, they're saying that the economy is deteriorating so quickly that the Federal Reserve is going to have to pivot a lot more quickly than what the markets are currently pricing in. And inversely, what they're saying is that the Federal Reserve, while it's still a wide mile, is going to, at some point in time, the odds are increasing that they're going to have to cut rates. And I think what the Federal Reserve is doing right now is that they are trying to jack up rates so quickly so that they can cut them. They have enough basis points to cut when they go back to cut and make any cut meaningful, because if they cut by a quarter basis point, they're going to need a lot more basis point cuts in their back pocket to use, and there aren't many of them. So I'm not going to be the least bit surprised for them to go full steam potato this month and jack up interest rates by a full percentage point, and then send a message to the market that, you know what, we're data dependent right now, and don't expect much more from us. I'm playing a little bit of catch up on this. Let's move on. We have a lot of stuff to get to. I see a lot of people are doing requests. We're going into a worldwide recession. FedEx CEO warns numbers don't portend very well. I would have played that video. But here's their Q1 results, or their preliminary. Not looking good in terms of what the expectations were. I can't go through all this. We have way too much to go to. Nomura calls for 100 basis point Fed rate hike. This is not widely embraced by the rest of the banking community, but it's certainly possible. I'm in the camp that they need as many quarter point rate hikes in their back pocket to throw back out to the people, and they may just scoop up 4, be one and done, and moving forward, send the signal to the market that they are going to be, again, data dependent. Central planners of the world unite. If you want to understand what's raging consumer inflation and Fed monetary policy, you must understand this. Right now, the United States, as in most of the world, we have a scam currency that's controlled by central planners. Specifically, we have what Karl Marx envisioned. Karl Marx wrote the Communist Manifesto. What Karl Marx envisioned in plank 5 of his Communist Manifesto. Number 5, centralization of credit in the hands of the state by means of national bank and state capital and an exclusive monopoly. Is that not what they have at current? So here's how the world is changing. Jay Powell, a breathing weapon of mass destruction. Cold war against inflation will fail, but not before crushing everything from risk asset, precious metals, and currency pricing to the U.S. dollar. Basically, what anything that's priced in U.S. dollars is getting crushed. Powell is accelerating global market shifts while sending a death knell to the ignored middle class. This is not getting lost on the politicians. After years of drunken monetary policy, the Fed has no good options left and is literally caught between an inflationary rock and a depressionary hard place. So at this point, what we need to do, folks, is we need to take a look at where the opportunities are. I said it earlier, forget about the Amazons, forget about Tesla. It hasn't really broken down hard yet. Forget about Tesla. Forget about these US-based companies that have already had their bull market run. In all probability, their growth days are behind them. Disruptors are going to come behind them. They're going to disrupt them. They may not even be US-based companies. Where do you want to look? You want to look towards precious metals. You want to look towards emerging markets. We have already begun bull operations on emerging markets. We began that last week. Why? It's because I believe that the US dollar has run its course. I've gone over this on Thursday. I've gone over Thursday Night Futures Live, Sunday Night Futures Live, and with members in detail about why I believe that the dollar is in all probability taking its last gasp for quite some time. And this article pretty much agrees with my argument. EM markets looking east, not west. The West is over. We are living in a post-West world. The liberal elitism, the globalism that we've enjoyed since the end of World War II is a thing of the past. It's a relic. So where will EM countries go trade? Survival, better energy pricing, and even fairer gold pricing. Remember, the Moscow exchange is opening up. Russia and China are making trade and currency deals, not only with BRICS, that's the BRIC nations, at a rapid pace, but with just about every nation not otherwise friendly, i.e. forced to be, with the United States. Why forced to be? Because we weaponized the US dollar. We weaponized the SWIFT system. And which friends now face a cold winter on this side of the Atlantic. That's their own problem. That's not the US. Well, I'm sure we helped, but they made their own decision to start that. They could have prevented the war, meaning the EU. They did not. I feel horrible for the citizens, but their politicians need to go, as do ours. And that includes Republicans and Democrats here in the United States. So this is not a one-party thing. We have a uniparty. Mitch McConnell is completely satisfied to lose the Senate. He's been a vocal pessimist about the upcoming elections. He's got to go by vote, not violence. We do not promote violence here. Even the notoriously corrupt LBMA gold market, which spends its every waking hour using forward contracts to artificially crush paper gold price, is about to see a Moscow-based new gold exchange. Moscow has tons, I should say Russia has tons and tons, literally, of gold along with China. They've been stocking up, preparing for this economic war for years. Somehow, our intelligence communities missed it. I guess it's because they were spying on parents at PTA meetings. Of course, such a Moscow exchange makes sense given that 50% of the world's gold comes from Eurasian zip codes, where a post-sanction Putin sees yet another golden opportunity to fix what the West has broken. Whether you like the guy or you don't like the guy is competent. Furthermore, and as stated above, the derivatives markets delever demand for the US dollar, and hence dollar strength will equally tank as OTC settlements are done in US dollars, not pesos, yen, euros, or yuan. As we've warned within weeks of the failed sanctions against Putin, the world is de-dollarizing. We did this. We killed the goose that laid the golden egg. We did it. Slowly and steadily, and once the Dixie, that's the dollar basket of currencies trading against the US dollar, inevitably slides from 108 to 107 to 106, the greenback's fall will mirror Hemingway's description of poverty, slowly then all at once. That means a dollar is going to crash. If you think inflation is bad now, that's another alert. See what happened. If you think that that's another news item. If you think that inflation is bad now, folks, wait till the dollar starts tanking. Remember, oil is priced in US dollars. For the last 14 months, and this is what I've been trying to communicate, the dollar index has been trading above its quarterly moving average, which, as the always brilliant Michael Oliver reminds, is like a runner who never exhales. At some point in time, the US dollar's lungs will collapse. As for gold, waiting for the US dollar to snap. This is an extremely true statement. In fact, so much do I believe that this is the current state that we added more to the GDXJ, that's a junior mining ETF, last week for the first time in months. Many are nevertheless angry that gold hasn't ripped in the world of geopolitical risk and rising persistent inflation, but that's because the artificially rigged US dollar has been their only and short-lived measure. Buckle up, folks. So opportunity is going to be in emerging markets. When the dollar falls, take a look at the EEM, symbol EEM relative to the US dollar. The dollar tanks, emerging markets rally. So when the dollar goes into the tank, emerging markets are going to do quite well because that's like a tax cut. Silver already rallying in the face of a US dollar, which generally trades inversely of. Gold still not catching a bid, but the miners rallied off the lows on Friday. Folks, these are the early stage opportunities. Goldman Sachs's U.S. forecast now sees zero growth. That's pretty much what the Atlanta Federal Reserve has come out with. I think they have it up a half basis point, some meaningless number, but they'll downgrade it again this week. Now, it all goes back to leadership, folks. It all goes back to leadership. We're so corrupt. We're so rotted from within. They're going to have to tear down a lot of these institutions to help rebuild. Biden asked Congress to end social media immunity at White House summit due to hated-fueled violence. I'm not against tearing down their immunity, but we have different reasons as to why. He wants more control on free speech. I want less. They fear free speech. And the social media, the weaponization of social media, it just gets worse. Fauci says he handed over documents for big tech censorship lawsuit. This is all coming out now. This guy is running for the hills, retiring, persona non grata. You'll see him back in front of Congress in a few months. FBI whistleblower says Bureau labeled veteran group domestic terrorist organization. The war is against the people, not against our true enemies. Man scraps modified diesel truck after government determines it's illegal through Facebook Marketplace. Again, the weaponization of social media. Facebook spied on private messages of conservative right-wing individual, then reported to FBI for domestic terrorism. Is it any wonder that Meta shares are down peak to trough? I did this earlier, 63%. Nearly 64%. This company, to me, is uninvestable. Chevron CEO warns to brace for high on natural gas prices this winter. Again, going back to the weekly chart of natural gas, folks, we gapped down. Let's revisit that price of natural gas because I do have an exposure there. Thank God we have covered calls. /NG. And we're holding support. Good. How much time do we have? 6:47. Again, what I'm trying to pound home here, folks, is that we have so much rot that's coming out now. It's not even hidden. The Justice Department was dangerous before Trump. Now it's out of control. It can't be argued. We're at war in our own country. There is a war going on. It's World War III. The difference this time is that it's not as much kinetic as it is information, and we are at war with ourselves. States to ban gas-powered cars despite human and environmental costs of electric vehicles. They can't explain to you the level of damage that it does to the earth, these EV vehicles, and lithium prices are ripping through the ceiling. It's not like they're making any more lithium. And the scars that are left in the globe and the lithium ponds that are created due to these vehicles, it's a catastrophe. Yet you have clean nuclear energy that they're shutting down plants over in Germany in the face of a shut off of oil and gas out of Russia. California signed the most aggressive package of green laws. This just happened this weekend. This guy wants to run for president. I hope he does. Inflation front, Brazil. Coffee bean supply to hit record low as global scarcity worsens. The investment here, folks, is always an investment. Symbol here. Franklin, if you're out there, I'm sure you're already on the chart. Joe. iPath, Bloomberg Coffee, some index. Nice consolidation. This is going to break out soon. Weekly chart. Nice orderly pullback, holding support. Would I be an aggressive buyer here? No. Would I nibble? Sure. End of cheap food. We can. This is just on and on. Rice shortage. And who's benefiting from the incompetence of the West? China enjoys energy bonanza as NATO's sanctions against Russia fail. The war is over. They may be fighting over there, but economically, it is over. India overtakes UK to become the 5th largest economy. Folks, these are the investments that you should be looking at. Not that I had a good week last week, but these economies are lean, mean, and they're growing. They're producing things. They're building things. Sorry about that. We already went over this. More bad news out of Germany, nat gas, blah, 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 blah. It just never ends. A bit of good news here. I don't want it to be all bad news. DOJ denied access to Trump raids, docs after judge appoints special master. And in Sweden, they finally got rid of that left-wing government, which is very, very nice. And I mentioned a few weeks ago when they came out with the jobless claims, non-farm payrolls, that I didn't believe them. I thought they were overcounting. And I believe this is the Heritage Foundation. They confirmed our opinion that, yes, in fact, the last non-farm payrolls data, they double counted, and that's why you had such a big beat. In fact, the monthly U.S. jobs reports have top market estimates many times this year, including July and August non-farm payrolls, which showed 528,000 and 315,000 new jobs, respectively, higher than what most economists and analysts had initially projected. Now, if you take a look at the establishment numbers, they came out with big beats, but the surveys, the household survey reports came in with job losses. I'm not sure if they addressed that here. Yeah, here's the double counting. It's all a grift. It's all a grift, folks. And we're sending more arms over to Ukraine. Let's go do some chart requests. Let's get to it. Let's go do some comments first. Yes, the Moscow Standard. Yep. The future currency is BRICS and XRP ledger with Ripple. Agree. New development bank on the way. Dark stuff is already set. The dollar is over. BlackRock built XRP. Supreme Court date is December. You can't even buy it here in the United States. Hey, Talon. Oh, CNBC actually acknowledged the BRICS. Mainstream can't talk about BRICS takeover. Destruction of the dollar on purpose. Manufactured. Agreed. Tom, let me write these down. CRTA, Apache. All right. Talon, hey Bob, thank you for answering our question in the Marys area. You're welcome. RB, happy Sunday to you, my friend. Google, please. You got it. Oleg, hello to you in Moscow. Seymour Rose, to be fair, savings accounts were paying high interest rates at the same time mortgage rates were high in the late 70s. Yeah, very good point. We only hear about the high mortgage rates. Very true. Will, yes, please, folks, smash the like button if you will. I'd really, really appreciate it. It helps me out with the YouTube algorithm. Seymour Rivers, 9/11 popped that fat, dumb, and happily usually delusional. It did. It really, really did. And, 9/11 empowered. It empowered the central banksters and the government to take away our rights. So they took advantage of a horrible situation. Anik, welcome. VAERS and CDC were trending separately last week. CDC is in a lot of trouble. California bans power. Yep, we went over that. Yep. And they wanted to stop you. That's hysterical. That's hysterical. Buy an EV vehicle, but don't charge it. They don't want you in a car. They don't want you they want you locked down. That's the goal. That's the goal. Lock you down. Amazon will do well. Welcome to Biden's divided states of America with no borders. Yes. 4 million undocumented illegals coming into the country. CT, the truth may frighten some of us normies in the chat, but the truth hurts. Yeah, one observation, it's kind of good, is that, a year ago, if I would have gone through these articles, I would have had a slew of people complaining about being political and blah, blah, blah. I'm not getting that. Your comment right now is forthcoming. And it's good to see that a lot of people have woken up. They've really, really woken up. And that's exactly what the communists that are trying to take over, they did not want. They wanted everyone to stay asleep, watch Dancing with the Stars. Going out on a limb here, but I'm willing to bet that Bill Gates will be solar farming on all that farmland, not to mention human trafficking rituals. I wouldn't doubt it. When real estate tanks buying up land will be the banks leasing. Yep. KBH told trading below book value, PEs at 2,000. I don't think those are cyclical plays, Falcon. I don't think those can be bought right now. Lockdown. Yeah, exactly. That's what they want. That's the goal. The whole goal of EVs is to limit the range of travel and to be able to shut down your car whenever they want. Remember what came out in that so-called CARES package, or one of those packages that came out? By 2025, you're going to have cameras in your car. The new cars are going to be equipped with cameras so that the cops can turn on the cameras in your car, and they'll have a kill switch on your car. That's what this is all about. Control. It's all about control. Let's do some chart requests. Get back to business. CRTA. I write this down right? CRTA. Can you please confirm CRTA for me again? I'll go over to Apache. I'll wait for confirmation on the symbol, APA. All right, so Apache weekly chart. This is the value of the automated trend lines. I knew exactly in 3 seconds what I was going to do here. Take them off, put them on. There's your algorithm at work. 35% discount code below, folks. And I'd be looking for a breakout here on Apache. I would not be a buyer right here, right now. We'll see on a daily chart if we have a lower band of support, which we could buy off of. This is a trade I'd be interested in. CTRA. Thank you for that. CTRA. Okay, our alert is set here. That appears up here on the right. We're good to go. CTRA, Terra Energy. Not liking this. You have a bearish reversal bar, a lot of selling above. You have a potential double top here on Katera. Two resistance levels above, one support level below at around $27.11. I wouldn't be a buyer here until we hit that support level, just like we did back in July. We hit the lower band of support, and then we reversed off of it. That was your buy signal. Let's go to a daily chart. Daily chart is a cluster F. Why? Because we had a breakout above resistance, and then we rolled over. This is what you call a breakout point failure, also known as a bull trap. Yoga. Bob, real question. Is there a way to check microchip stocks, any correlation with crypto? So microchip stocks, I would need a symbol, and you could benchmark it against Bitcoin. Yeah, there's a way to do it. I would need a symbol, or ideally an index of microchip stocks, and that way we could do you could do a price performance overlay. You could also do a correlation overlay, and you could do it on a daily time frame, weekly time frame, whatever time frame you want to do. But if you could get me the index, if there is an index for microchip stocks, let me know what that is. We could do the overlay on Thursday Night Futures Live. You bet, Yoga Mac. Sounds good. Perfect. Okay, so back to CTRA. Avoid this right now. Let's see if it holds these two support levels below. If it fails, well, then you're looking at support down at 26.85. Google. Go to the monthly view. Yeah, Google's a basket case, folks. It broke critical support this month. We're trading just off the lows of the month. I think that we go lower here. Weekly view. We broke down last week. Daily view. Got a reversal bar on Friday. Maybe they'll rally it back up to 106. I'd be a seller of Google into 106 and quite possibly a short, especially if the Federal Reserve does not deliver on some sort of a dovish statement and yields tick up higher. Apple. Apple is holding on by a very thin thread. You have a double top monthly chart. Where we've broken one support level this month, holding another weekly view. An outside reversal bar. You saw outside reversal bars all over the place last week. Apple was not spared. This is very bearish price action. You have a couple of support levels immediately below. Daily view. We closed just off of a support level on Friday. Maybe we'll get a pop-up higher here. I'm with yields above a 3 handle, I do not like technology, unless, of course, the economy begins to grow again and they could see a growth. We need growth. We need the government to stop spending, and we need economic growth. Absent that, we are in a lot of trouble in this country. Costco. Costco, I love the company. I'm not liking the chart. It's under a lot of pressure. Double top on a monthly view. No confirmation breakdown yet. Outside reversal bar last week, trading like a tech stock. This is a hybrid between consumer staple and consumer discretionary. I think it goes lower. If I had to hazard a guess, I think it goes lower. Friday, what we did do, we closed down below a support level. We did manage to recapture it on Friday on volume. Maybe we'll get another pop here. We may get a rally into the Fed meeting for whatever reason. Let's see what equity prices are doing at current. I see somebody just requested the 10-year yield, thinking exactly the way I am, which could be dangerous. 10-year yield is weak on the, well, actually, it's off of its highs. It's still up on the session. E-mini is pretty much unch. NASDAQ 100, they were down over a third of a percentage point. We may have higher lows getting put in here, 30-minute chart. Dollar is weakening up here. That is good. If the dollar is weakening up, then I'm not afraid to take a look at gold, which is up slightly. But the thing with gold is that it's been rallying and then fading, rallying and fading. So jury's still out. We're going to wrap it up tonight with two charts. One for Tom, the other for Yoga Mac, FNV. Monthly view, I'm not familiar with it. Oh, Franco Nevada, I am familiar with it. We were higher, a reversal. I like it at 114 on a monthly chart. Good support down there. We may get there because we flashed an outside reversal bar last week. Pretty bearish price action. We closed to new lower lows, daily view. Watch for support right down here. Again, low 114, high 113 handle on FNV, and you can look to pull the trigger to the long side. Last one up, RBLX. Possible higher low monthly time frame. I think we did this one the other day, right? We were close to a breakout the week prior to last, and they tried to break it out last week, but it reversed, and you had a breakout point failure. This is a bearish chart. You do have some support below. I'm not ruling out a potential breakout here, but I like it at $37.50 per share. That's Roblox. I see. Thoughts on beat heading into tomorrow really quick. I guess we're going to keep on going here. That's okay. Beat. Heartbeam. Avoid it. If you own it, I would sell it. It's unsustainable. You're trading well, they already pulled it back. We were trading above the third standard deviation Bollinger Band. I think you're going to get more of a pullback here. Weekly chart, we're still trading above the third standard deviation Bollinger Band. This is a story stock, clearly. I don't know what's driving the stock up higher, but clearly a story stock, a very nice consolidation for quite a long time. So I'm a big believer in the longer the consolidation, the greater the validation of any breakout. So I would not buy it here. I would wait for a further pullback on the shares. All right, this one's really the last one because I'm losing my voice. Boeing. Boeing is a basket case. Oh, how the mighty have fallen. High 130s, 140 would look interesting here. What do we do on Friday? They tried to defend the support level. Ultimately, they were unable to do it. We closed below it. I like 140 on Boeing as a entry point with a tight stop immediately below. Stokes are very oversold. We may rally here on Boeing. With that, folks, everybody have an awesome, awesome night and a very, very profitable trading week. Sorry about the technical glitch this evening with the video, but thanks for being here. My honor. Please like, subscribe. If you're not familiar with technical analysis, I have a free 5-part video tutorial immediately below. Enjoy it. My top 5 favorite candlestick patterns. And everyone have a great night. Take care. Be well.